Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and welcome to our weekly market update. We try to keep up to date on everything that's going on and just things that you should be aware of, and always try to cover off a topic. And today we're going to be talking about gold. No, we're not. We will touch on the elections and everything that's going on there. We obviously did a couple already on the election. Pre-election last Tuesday, and then on Thursday we had our chief economist out of Boston, Tony Dwyer, do a post-election kind of summary. Of course, we now have the results, or contentious results anyway, out, and we'll touch a little bit on that in the news today. But we're going to talk about gold because we've talked about gold leading into this, how it's been performing, why you might want to have it in your portfolio, and also kind of what we're seeing with it right now, and how you might see this play it out for the rest of the year. So with that, as always, everything we cover in here is for your information purposes only. Don't take it as advice. Your situation is always unique, different than anyone else's. So always go to your professional, give us a call. You can go at mikeonmoney.com. You can reach us electronically, by phone, email, any way you'd like. Happy to discuss your personal situation and how any of these things might apply to it, or do your own due diligence, but just make sure you look into how any strategy might affect your plan and how you might want to implement those things. So as always, your microphones and videos are muted, so don't worry about if you're moving around. We won't hear anything. And if you do have a question, though, by all means, there is that. If you move your mouse there, your bar should show up. There's a little Q&A button. You can click on that, type it in. We'll try to get to it today. We always make sure we do follow up if we've missed any. And we'll always get your answers anyway. If you're watching this on the replay as well, feel free to email in or give us a call with any of your questions. We'll make sure we get back to you on those, or help out in any way we can from that front. So let's dive into things. What are we looking for this week globally or US? We're looking for employment numbers. We're looking for definite results of maybe a conceding speech from Trump on the election, but we'll put that aside for a minute. What we're looking for is the U.S. unemployment numbers. As through all this, this is one of the key numbers we really have to look at for the economy, not just the U.S. Obviously, the U.S. is one of the bigger economies, and certainly as far as Canada goes, trading partners. But it's one of the big numbers we really want to track. That and inflation numbers. Those two can really drive the economy or push things, and they're the kind of the leading indicators. So when we talk about indicators about which way markets might be going, there's leading and trailing indicators. Trailing kind of tell you, confirm, what you were thinking, because it's already gone past. For example, recessionary numbers. Recession's usually 3 to 6 months after you've already gone into the recession, you find out you're in there. So unemployment are definitely one of the leading numbers. We are expecting them to be slightly better than last month out of the U.S., but again, that pace has slowed below a trend that we'd like to see. So if we get surprised to the upside, that'll be great news to know that we're seeing better employment numbers out of the U.S. Obviously, that's being overlaid by the COVID situation, but the job, at least the job market is growing, and we want to see that continue and in fact accelerate down there. Stock futures jumped on Monday after kind of Biden's electoral win. So we've seen a little bit of back and forth. On election day, we saw some good positive markets, kind of on the expectation that Biden would win. I was a bit surprised that after it was a closer race, we didn't see a bit more of a sell-off as people maybe got a little bit nervous. We did see gold come off a little bit with a little bit of nervousness there as after the election, but not much, nothing major. And then kind of when Biden came out, we saw a bit of uptick because some strong numbers on the U.S. market and in the Canadian market. Probably a little bit too strong because we're not through this yet. And also we don't know what the stimulus package is going to be should the Democrats kind of get in. The Senate, of course, the control of the Senate won't be decided until January because there's two elections that have to happen there. It's so tight there that they didn't gain immediate control. So a little bit surprising. We've seen a little bit of selling off today from that Monday bump, which makes sense. Like I said, it was got a little bit too ahead of itself, and especially in a couple sectors like oil, and I'll touch on that when we talk about commodities. We also saw some new legs in the stock rally as people, a little bit of that uncertainty. We talk about that the last couple of weeks. Markets don't like uncertainty. We do now, have a bit of certainty. So far we have certainty that it's Biden. All the experts are saying that that's a done deal. Of course, we have to go through all the steps to make sure that happens. And now we have to see where they end up. Obviously the Democrats lost a couple of seats or spots in Congress, still have control there. And of course, we have to see what happens in the Senate because they want to put a bunch of things through, especially as far as tax measures, stimulus packages. They need both Senate and Congress approval for that, which is why we've seen that second round of stimulus package in the U.S. delayed, as the Senate has been delaying, waiting the outcome of the election, as Trump really wanted to put his brand on it. In fact, one of the things he was asking for is that all the checks would have his name on it, so that people will know it came from him. And obviously that's not going to happen. So we'll have to wait to see a little bit more on the stimulus package. But we are seeing some positivity in the markets, which is good. And in interest rates, that other number I mentioned with inflation are still continuing to stay low. The outlook is still that they will stay low. So, that creates a lot of liquidity. So very, very positive for the market conditions. Overseas, investors are expecting the administration led by Biden to be a bit more engaged on the foreign front. Obviously, there's been a lot of stresses. We've had tension with China, or the U.S. has had tensions with China for over a year now on their trade deal. Europe, most of our allies have had some issues with kind of foreign trade or foreign relations. Obviously, the U.S. pulled out of the Paris Agreement, pulled out of the Iraq Agreement. So quite a few things that are back on the table again that Biden could go undo or redo, if depending on what approach he takes to it. And we're going to have to see a little bit about. We're going to have a little bit of a wait and see how that plays out. But Biden has indicated that he's going to undo a lot of the executive orders, especially around the environmental issues that were rolled back under the last presidency. So a lot of foreign countries are optimistic that it's going to go well with the U.S. going forward. Even Canada has talked about working even closer, especially around the environmental issues, to improve the situation that was going the other way for a while with the Trump administration. So what's going on as far as the markets and companies go? Well, we just started the clash of the consoles, so I'm not sure if you're into the gaming sector or you have kids, grandkids that are into it. But of course, we're headed into holiday season. So what's a holiday season without brand new consoles to go buy or video games to go buy? And of course, Microsoft's Xbox is coming out with their brand new console at the exact same time as Sony's coming out with their new PS5, PlayStation console. So it's kind of the war of who's going to win the head-to-head, the graphics, the different games, what's going to be available. So we're just getting into this launch. So we'll keep a very close eye on both those companies to see how they fare going into the holiday sale season. The pandemic, of course, is still in center stage. Numbers are increasing globally. We're seeing shutdowns around the world. Of course, in Canada here, we've already seen Eastern Canada, mid Canada, I guess, Quebec and Ontario doing more and more shutdowns. BC, I'm sure everyone's caught up on Saturday, where Bonnie Henry came out and announced BC's going into for their lockdown. So, I think it went into effect at 10 p.m. on Saturday night. no guests in your homes other than your immediate family. They did make some changes to the original announcement, saying that if it's someone that you're very close to and you see every day, that's fine. No outdoor gatherings, even with social distancing. Although they said walks are fine as long as it maintains a very small group. It can't turn into a large group. So I know we have 2 dogs, so we tend to walk with friend with another dog. So that 1 or 2 people is okay, but they're trying to avoid larger groups. They're still keeping the restaurants open, but you can't go to the restaurants with anybody outside that immediate household group. So you can't join another couple or a set of friends at the restaurants, but you can attend with people within your household. So that one's a little weird. I think they're trying to balance things between limited contact, but trying to keep the businesses open. We'll have to see how that plays out. I think that's a really tough call. I don't know if you can achieve what they really want to achieve with that. And of course, they made no changes to the schools. So the schools are still in person. There's still no mask wearing required. So, again, I'm not sure that I'm sure of what they're trying to achieve. I'm not sure that this latest rollout is going to achieve that, but we'll keep a close eye on, and we're very likely probably going to see some modifications or changes to that as they try to target where the big spikes are happening. Hedge funds, so institutional managers are out there dumping more oil. We covered this a couple of weeks ago. We started to see the early trends of this. If you've been a regular listener to any of these, I've been against or negative oil. I shouldn't say against oil. I've been negative oil for a while, especially going into the second wave of the pandemic. There's really no push to the upside for global demand. I mean, even if we had, and we'll touch on the vaccine announcement, but even if we had the cure tomorrow, I don't know that. I mean, we definitely see an uptick in oil, but I really, really see oil as a decline in industry. We've turned the corner. Globally, the world has turned the corner on technology, in cleaner technologies, more efficient ways of creating power. There's pushes, and in Canada, we're just kind of in the early stages. Around the world, we're actually a bit behind when it comes to what we call clean tech, around kind of oil or fossil fuel usages. Even China has been pushing away from that a lot more. They're still a big user, but the rate of decline is faster than even Canada's in some of the most current numbers I've seen. U.S. is a bit behind. This current or ending Trump administration was very fossil fuel oriented, and they didn't believe in, of course, climate change, so they didn't push much on that front. But the cost has come down that we can pretty much across the board, or very close to across the board, start to switch to these new technologies as we start to replace infrastructure, which of course is a decline in global demand on oil. So as far as that sector goes, I mean, there will be a time and a place to use it in a portfolio. I certainly don't think now. It did have a big run up in the last couple of days, but I think we're going to see that pull back really fast because there was nothing to really warrant it. In fact, with more shutdowns globally, lower mainland, you're not supposed to travel outside of the lower mainland here, except for necessary travel. So, as we see more and more of that, that around the world, that's going to decrease even more demand. So even the institutional managers are running away from oil there. Biden, welcomed the vaccine breakthrough. So if you didn't follow this one, Pfizer, one of about 5 or 6 larger vaccine producers that are in late stages of their testing, their phase 3 testing on their vaccines. And Pfizer put out some preliminary tests, some preliminary results. So these are not complete. That's one thing I don't know that the media really emphasized. There's still, quite a few or a bit more testing to do, a bit more results to crunch through. But those early results were strong, 90% effective from their vaccine as far as the protecting people and creating those antibodies within that group. Now that 90% could change based on the balance of the testing results, right? We don't know how many of that test group were on the vaccine and which ones and how much were on the placebos. And we don't know from the balance, right? It's blind, only Pfizer, and they'll release it afterwards when they complete their test. But they wanted to get some early results out to the peers, out to other researchers in order to start vetting those results early so they can move closer to or quicker to a result or to an approval. They did go to the FDA for an emergency use approval. That'll take a little bit of time, and of course, also be looking at the balance of those tests. So one thing also to talk about was I think it was Pence. I know I have here Trump's administration. I think it was Pence came out and said, they put I forget the name of their program where they were funding some of these, help funding some of these vaccine trials. I think lightning wave or lightning test. Anyway, Pfizer did not take part of it. Pfizer refused the money from the government, saying no, they wanted to stay true to the science. They didn't want to have any political pressures around it. So this was not funded by the U.S. Government. The U.S. government, however, along with many other governments around the world, do have advanced orders in with Pfizer already to get the vaccine when it actually goes to production. So that's good news. I would still kind of, not the magic pill. I mean, a good example is that I think Air Canada stocks shot up like 20% yesterday on the idea that this vaccine's coming. Way too early for that kind of advancement in the airline stocks. This is not just going to open borders automatically. It's not an automatic cure. We've talked about, there's the rollout, which country is going to get the vaccines first, what quantities are they going to get those vaccines in, and who are going to be prioritized to get the vaccines first. Bonnie Henry and Fauci in the US both came out after this announcement, basically saying, first quarter next year, start actually providing it to people. But again, who and when. I kind of using an example right now. I've not been able to get my flu vaccine yet this year, just due to limited quantity. There's been a big demand for it. I'm not considered a high risk group. I guess that's good news. So I'm not prioritized to get that vaccine. So I'm kind of, the back of the line, which would be true of a COVID vaccine as well. So keep all that in mind when we talk about we see this good news. It is great news. The Chinese vaccine, I should say, which was being tested for Brazil, just got put on hold due to some abnormal results. So it's good to see that the Pfizer one's at least moving forward. So sooner we get there, obviously the better. But always, let's make sure we dig into what those announcements mean before being too reactionary to them. The EU, we've talked a little bit about the EU putting some tariffs on the US. They say regrettably in their news announcement, and they're hoping that, working with Biden, they'll be able to work through this a little bit better. This, again, this isn't a, as I mentioned before, it's not a retaliatory tariff. It's strict. It's kind of around the airline industry, looking at Boeing specifically. And this is one of those tariffs when one government subsidized an industry to help them out. And in this case, Boeing was subsidized a bit by the US government, and on a global scale, so to make it fair for European companies to be able to bid pricing wise for the same contracts, they put a tariff on the US airline parts and planes in order to make it a fair playing field. This happens to Canada a lot. Sometimes we'll have subsidies for farmers, and then when the farmers try to sell into the global market, Canada faces tariffs on those goods just to even the playing field. So it's not a retaliatory tariff. It is really just focused on keeping the playing field equal for everybody. We talked about that we're looking for the labor market numbers out. The view as to how they're going to come out is a bit mixed, as I mentioned. We are looking hopefully a slight increase over last month. However, that increase has been slowing. We could start to lose jobs again as we are seeing more shutdowns, more bankruptcies, and more downsizing. So keeping a real close eye on that. Saudi Energy Minister and OPEC or OPEC Plus. So OPEC Plus is just a bigger group of oil producing countries outside the OPEC get together. Earlier this year, when oil went into negative numbers, they got together to really turn the dial down, cut global production in order to prop up that price, to keep the price higher. So turn down supply to at least match demand. They're going back again looking for more cuts because demand has continued to decrease. Of course, with sell-in pressure on the oil stocks and on the oil price, they're trying to prop up that price a little bit. The challenge there, as always, is some of those countries really rely on that revenue to keep the doors open, to keep things moving. So it's harder for them to turn off the taps. And we have actually seen some of those countries actually dump cheaper oil out there, which has caused disruption in the pricing. So, OPEC Plus is going to meet again, and they're going to try to continue to keep the production down globally in order to try to keep the price around that $40 range where they've been anyway. SoftBank, Japan SoftBank Group, they were having a lot of challenges going into this. They went into the red. Their Vision Fund is back to the black again based on the tech upswing, the tech valuation upswing. A little concern in there. It's good that they've turned it around. Now they've got to be smart and really try to figure out how they're going to manage that portfolio because as we've seen, even today, we're seeing a sell-off in tech. Not a huge one, but we are seeing a sell-off in tech, and we saw one at the end of yesterday. And that's just people taking profit out as technology has run up quite a bit through this. And there's some key names out there like Zoom, which we're on right now. So the Zoom stock did amazingly well through this. Obviously, have been a big beneficiary from company spending to sign up for Zoom and to use their product. But if we do get a vaccine, people might go back to the office. Subscriptions might fall off as far as Zoom goes. And that is, Zoom's a really good example of a technology that, has boomed probably way too high. In fact, in my opinion, 100% went way too high during all this. Because if you look at their pricing model or the sales model, is they sell a monthly subscription. So every user has a monthly subscription that they pay while they're using it. But if all of a sudden you go back to the office, you can just cancel that subscription. There's no penalties. There's no, you don't have to keep it for 12 months. You don't have to keep it for 3, there's no really incentive to continue if you don't require it. So the earnings for Zoom could fall off or drop a bit anyway if we do see people start going back to the office and we do start to see people vaccinated. So it's an example of where we're seeing profit being taken out of the tech industry. As always, we take a look at the global numbers. I'm not going to dwell on them too much. They are what they are. They're a little depressing in some cases. Globally, we're at over 51, approaching 52 million cases. Deaths around the world are getting close to 1.3 million. The U.S. is approaching 250,000 of the death. They are through the 10 million mark on the total cases. Canada's blown through. We're at 270 on total cases. And where we stayed below the 10,000 last week, of course, we went through the 10,000 death mark. We're now almost 10,600, so approaching that 11,000. So, and again, this is not a complete list. We do take out, it is ranked based on these countries, but there's a bunch of countries in the middle there. We just can't fit them all in. You can go check it out, obviously, online at worldometer.com. I don't go too often. I have to look at these numbers on a regular basis. What we have to do is focus now on getting better and containing this some way. It's getting to a point where it's almost at the point where, can we contain it? So, it's going to come down to the potential vaccine here. So let's take a look at the economies, US and Canada specifically. Coming up, the major indexes all surged kind of going into Monday morning with the news of both the election and Pfizer's we talked about. We saw everything. It did pull back at the end of the day. We did see a sell-off at the end of the day. Got a bit ahead of itself. That's pretty normal. when you kind of get that good news out, there's a lot of buying happening, and then people realize, oh, that's too much. We saw a bit of selling off. Markets were positive again today, but again, a bit of sell off, especially around the tech names, where they got a bit further ahead of themselves. And also, as I mentioned, some of those tech names which have really benefited from specifically the closures or the shutdown. Some concerns about, if we do have the vaccine, will they be able to continue? We saw gold peak up a little bit on the election results at the end of last week, hoping for that stimulus package, which would drive inflation, which of course drives up the gold price. And then we did see it slump a little bit, not a lot, but it did pull back slightly, just on the positive news in the markets and the potential vaccine. But even if we do get that vaccine, there will have to be a second round of stimulus packages. And we are obviously, with all the stimulus, going to drive inflation. So that's why we like gold. Apple this morning came out with their announcements. I didn't have a chance to put everything in here, but new products again for the holiday season. It was only a few weeks ago they came out with their new iPhones and new watches for this year. So this one was laptops and the iMac Mini, but probably more popularly the MacBook Air and the MacBook Pro both came out with new versions. And specifically, those new versions are introducing or highlighting the Apple chip. So Apple was using a chip in all their products prior, manufactured by a company called ARM, and they switched over to their own chip, the Mac chip. And so they're really highlighting that in these products, the speed and battery life extensions and all that. So if you like Apple products and you're in the market, those are out there. I think they're available for order. I only got to watch a bit of the launch this morning, just highlighting what product were, but I'm sure they'll be ready for order before the holiday season. So you can probably check that out. And if you want to see the replay, the Apple websites always have it there for you. Microsoft is also, as I mentioned, is looking at launching the new gaming console. Ahead, who's going to launch first, Sony or PlayStation? They've been telecasting this one for months. Both companies, we kind of know what's coming. We know what it's going to look like. It's just a matter of when you can order them if you're in the market for one of those. The job openings and turnover, as I mentioned, we're looking at that as I said, we are looking for a slight jump over last month's. But again, that trend is slowing. Also in the U.S., just talking about I've already kind of covered off here the effectiveness of the vaccine and what we're looking for there. So we'll keep a really close eye on that. McDonald's has also come out with a new strategy for 2021, and they've just beat their profit estimates as they come out with the most recent quarter. They've got a new chicken sandwich coming out, and I don't know if you saw it. They're looking at the Beyond Burger themselves, so a meatless solution for their products as well. Biogen, pharmaceutical, their stock plunged a bit as the FDA voted against one of the new Alzheimer's drugs. This is actually, when I talk about pharma or biological or drug manufacturers, I'm always really cautious with that sector, and always, caution people when they're playing in it. The larger ones like the Pfizers and the Johnson & Johnsons are less risky, but anytime you get to, especially the development side, because it is such a long road to that approval, and phase one, there's a million drugs that go into phase one that look great. They look like the next solution. That don't get through phase two. And then if they do get through phase two, phase three is even harder. And so few of them get through phase three. And meanwhile, you see this buildup in stock price as you go through those phases. And then right at the end, if you don't get it, that big plunge. And that's what we're seeing in Biogen. So always be really cautious. Make sure you're aware of the risk when you're going into pharmas. And make sure you understand how diverse the company is. Again, if you're looking at a Johnson & Johnson, which is one of the ones we have in the portfolio that I really like, they're really diverse across so many different product lines. one failure of a drug doesn't set them back massively. In fact, you might not even notice it. So really look at what type of exposure you're having. We're seeing more consolidation happening out there. We've seen a lot of it over the last few months in the energy sector. As they get gobbled up, the biggers are buying up the smallers that can't make it. Vans, the shoe, if you've got teenagers, they probably wear Vans or have the T-shirts. The owner, VF Corp, went out and bought to buy streetwear brand Supreme. So consolidation in the retail apparel markets. As they try to cut costs. They try to get to market cheaper and less through the kind of that brick and mortar type of venue, and more through the online or e-markets, e-commerce market. As we mentioned, Apple's coming up with that new Mac chip. So this opens another door of the PC chip war. We've seen chip wars in the past, with Intel, AMD, ARM. Just a pricing war, ability, and also a development war to who's going to come out with the latest, greatest. Well, now we've got Mac and that kind of died down a bit, and now we've got Mac producing their own, which could reignite that control of whose chip's going to be in the desktops and laptops going forward. There might be some ways to play that. Qualcomm would be an interesting one to look at, because they would benefit from whoever won the best chip of the year. Coming up in Canada, Civil Aviation Specialist, CAE. Love this story. CAE, if you're not familiar with them, actually a broad-based company, but one of the main things they're known for is building and selling flight simulators for training. So pilots have to get certified on different planes. They have to get recertified if they haven't flown for a while. They also do medical equipment as well, medical equipment training usage. So it's actually a little bit more diverse than that, but that's kind of their name. Why I really like this one, it was a great win for our portfolios. We got into it, through all this. As I mentioned, volatility is good. So CAE took a big hit. Obviously, when the pandemic shutdowns went in, the airlines haven't started to recover yet, but CAE would continue to be able to provide the training, and pilots had to start changing planes. They had to obviously, as the airlines were downsizing, cutting flights, going to smaller planes because capacities were down. Pilots had to retrain. They had to do recertification for the different airlines. Which was bode well for CAE. And of course, as the 737 MAX looks like it might come back again, all airlines need to retrain on the new procedures for that plane as they come back in. So we were able to take advantage buying into CAE just around the $20 price range. They just came out with their earnings, which were great, and the outlook was fantastic. And it's trading, last I looked before starting this, was $29 to $30 range. So a nice win for the portfolios. It's a great company. And we'll keep a close eye on what we do with that going forward. But again, looking for that volatility in the market, you can buy some really great companies at an excellent price. Air Canada, as I mentioned, their price soared on the vaccine. I think a little bit too early for the Air Canada or any airline stocks. Financial aid from the government talks continue, especially here in Canada, around the airlines. The government has said that this could be predicated on the airlines providing all the refunds that clients they haven't defined what that means. They just said that everyone needs refunds. So does that mean everyone has to qualify for their refund, or if they have to refund everyone who was qualified? And what that's going to look like. So some of the airlines are hesitant to say we're going to take government aid because they might not be able to, that might not offset the money they have to refund. Canopy Growth, cannabis company, started to turn some profitability, and I say that the shares have picked up as profitability has started to move there. Cannabis in Canada. Shouldn't say just Canada, but specifically Canada did plunge there for the better part of a year, even pre-COVID, as inventory and costs, too much inventory, too much production, and too high of cost. So we've seen a lot of bankruptcies, we've seen a lot of shutdowns and consolidations. even in Canopy's latest numbers, which have proved, but they had to book massive losses for previous crops and some closures. But it'll be really interesting because as the globe, Canada got the jump on this by legalizing it, able to get into the growers market. But as we saw in this recent election, a bunch more states legalized it in the US. A Biden government could federally legalize it in the US, and even other countries around the world are looking to move that route as well. And as you move into that territory, Canada doesn't have the best climate for growing cannabis. It's expensive because we have to use greenhouses. And obviously we need, we've got land, but you've got to build the greenhouse to that size. There's a lot of countries that can just do it in their climate a lot cheaper. And the other thing to really keep in mind on this is several countries, including Sweden, is moving closer and closer to a synthetic cannabis. When it comes, especially on the medical side, synthetic cannabis can be produced to specific dosage, which is one of the problems cannabis has, both as a recreational product, but as a medical product, is control and dosage. You can't always control dosage dependent on that crop, but if you get into the synthetic side of things, they'll be able to be very specific, and the medical side for sure will move to the synthetic side. Which obviously would decimate growers, as that's a big part of the market. So we'll keep a close eye on that. I still think there's a lot of pressures around that, but we are seeing some improvements, especially in the US. Of course, with more states coming online, there's a bit more growth down there. And if the federal does go legal, the US market will definitely have some opportunity. TD Bank is closed, kind of closed their doors to finance and oil and gas in the Arctic. So we're seeing a lot of pressures. We've talked about ESG, or ethical and socially responsible investing. TD's looking at not financing anything in the Arctic, a concern around activities in the Arctic Circle as they try to move towards zero emissions by, funding by 2050. A lot of companies doing that. A lot of pensions are doing that. So we're probably seeing more around that, but also, as we've talked about, there is that concern around the oil and gas market. So TD might be just getting ahead of the fact that they to prevent building up too much portfolio in that oil and gas sector that they might be looking at a negative outlook for. On the currency side of things, so as we've been talking about for a while, the U.S. is pretty much trending down. We saw it pretty unchanged with the victory. It held kind of at its lower level that it was at. We didn't see too much movement. We do see it kind of moving down over the next little while as a general trend. The euro to the US moved up slightly as they move closer and closer to a Brexit deal with the UK. Canada, I forgot to get it out here on the slide, but Canada finished at, again, last I looked today was about 76.88, slightly up from last week, actually just over a penny. So that was good. And that was mostly, we did, as I mentioned, we saw a little bump up on oil. Speaking of oil, the commodity fronts. So when we say bump up, again, we really, since that May low, we've seen oil kind of moving in here between kind of the $36 and $42 range. Certainly not to numbers that make sense for the industry. Currently sitting around $40 on the futures. I think those December futures just shy of 38 a barrel. And that was a big move up. It was down to about 36. And that was, just based on the market saying, hey, we know who the next president is. Here's the vaccine. Maybe we'll get back to normal, but still probably too early stage on that. We did see Suncor in Canada here kind of have a pretty good move on their stock. But again, I think that's too early. I would say that's gonna fall back a bit. It's way too early, I think, to dive into that market until we actually see some movement on the demand side. As we talked about gold on the pricing side of things, and I'm going to dive in a bit more there as well. And as we mentioned, the U.S. dollar some concerns of further downward pressure, especially after we find out what stimulus measures Biden's going to put in under his presidency. So let's talk about gold. So why do we like gold, and what are we looking for in gold, and how you should use in your portfolio? So we've been using gold in the portfolio for, well, I guess it's about a year now, pretty much since last October, November. So so gold is a commodity. It's a currency basically, but in reality it's a hedge. So it's a hedge against sometimes negative news, but certainly a hedge against inflation. So it's a good way to play off inflation. We started using it late last year as a hedge against some risk. So, you know, potential downturn in the U.S. market prior to the pandemic, not because of the pandemic. Our view was that the U.S. market was a bit overpriced, potentially headed for a recession or a correction. And we did see that, but it, you know, was accelerated obviously by the pandemic closures. So, but we had it in the portfolios for that reason. Now we've actually increased that through the pandemic. And we've seen some nice moves. I apologize. I always promise you guys not to overwhelm you with too many graphs. But I just kind of wanted to show the trend, you know, ignore all the technical lines on here. But this is basically the kind of the price of gold since January. So we've seen a nice trendward up. As risk came into the market, you know, the trend started to increase. And then really what we started to see right after the lows in March of the markets is that stimulus package come out. So that started triggering inflation concerns and increased inflation numbers. So that's where your gold's trended up. It kind of peaked out just above the 2,000 an ounce. Has pulled back a little bit. To me, that's just a good way to enter if you haven't got it in your portfolio. Now, this should not be 40-50% of a portfolio. You know, it should be, you know, dependent on the different risks you have in there. You know, you can go anywhere from 2 to, I really wouldn't go over 10%. In fact, maybe 5% would be a good weight in the portfolio. But as we see this next stimulus package, which is again going to trigger a surge of inflation, we should see, much like we saw this chart off the bottom, we should see that push up. Most firms are looking out there to see 21 to 23 an ounce in the early part of the new year. 23 might be on the far end of things, but you know, it is a good way to protect the portfolio against those risks, and a good solid investment, especially with the volatility we're seeing in currencies, and specifically those currencies being the US dollar. Again, the Canadian dollar being pegged to the US dollar, that affects ours as well. So I do recommend you can go out and buy the individual names, you know, the Barrick Golds, you know, the individual producers. I prefer, for most people, you know, there's a XGD, which is it's an ETF. It's a very, very cheap ETF as far as administration costs. It gives you a good broad exposure to the market or to those companies. You don't have to pick one, because in gold, inevitably, with any mining or any commodity, you know, you can run into a management issue. You could run into a mine issue. You can even run into a political issue, because some of the gold production is outside of Canada, and you can run into a situation where a foreign government changes the rules or closes a mine or just causes problems. You can even run into labor strikes, you know, around different issues. So, you know, I find that ETF package much more protective. You're not giving up much on the return side, but you're still getting all the benefit of the underlying commodity price movement. So if you're looking at that in the portfolio, that's where I would recommend you take a look. We definitely have in our portfolios. We have added a couple times along the way as we've seen dips over this last year. As I mentioned, we do like it going into 2021. And with a Democratic government, the stimulus package should be a little bit more generous than if it was a Republican government. That's certainly how it was looking going into the election. Very likely what it's going to look like. And again, the more generous the stimulus package, the more you drive up that inflationary number. The other thing to keep in mind, gold does tend to trade. The tendency is to trade opposite of the US dollar. So if we do see a continued trend down on the US dollar, which for a lot of reasons they want that, you know, they're racking up debt. if you deflate your dollar as you pay it back, it's more favorable that you're paying back with deflated dollars and lower interest rates, obviously. As we've even seen for short periods of time, some U.S. debt go into negative yield, meaning people are paying the U.S. to hold their dollars. So that very positive for the U.S. to deflate their currency a little bit. Obviously, they don't want to fall too far, but as they do that, will put the pressure up on the gold price. So that's kind of what we're seeing in gold right now, what we've seen in the last week. No big surprises on it. As I said, we did see a little bit of pullback from its early gains on the election news, but that was, as I said, just kind of some euphoria around the potential vaccine, and also probably some overselling and overbuying on the other side of things. So with that, I'll let you guys go. As always, if you want to see the replay of this or catch up on anything else, go to mikeonmoney.com. Love to hear from you if there's any topics that you want us to cover, or commentary or questions on any of the stuff we cover here. We will be starting some new videos this week. Looking to highlight on cybersecurity, which we've had in the portfolio. It's been great. I want to talk a little bit more about that because I do think it's a topic that it's broader and more detailed than we generally read about every day. We generally hear about the breaches, not where where the companies are benefiting from protection. So going to take a look a bit more into that, and also I want to talk more about that ethical or clean tech investing. So look for some videos and articles coming out on those things soon. So with that, I'll let you go enjoy your day, and we'll talk again soon. Thank you very much.